2,000 investors attending the Credit Suisse conference. What's the sense you get of the sentiments towards Asia and India?
We find actually, we do a survey on the second morning, so today, asking clients what are their favorite markets and their outlook. So generally, we find investors are cautiously optimistic. Most investors seem to be looking for a 10% return. But interestingly, India is actually one of the markets that they think will underperform. So most investors actually are saying that they are actually underweight India.
What are your thoughts on a possible currency war in light of the strategies adopted by Japan? How do you see the Indian rupee moving in course of 2013?
I think the concern on currency wars is not that high. I think it's of particular concern actually for Asian investors, particularly those on the yen-won cross. So it's actually more of an issue for Korea, Japan than maybe for India. On India itself, because India does have a current account deficit, we're actually rather cautious on the currency. But we do believe that even with maybe a slightly weaker currency, that the Indian equity market in US dollar terms will still give you a pretty good rate of return.
With the US economy showing signs of recovery and capex picking up, do you see risk to easy money or QE3 exit? Is this good for emerging markets flows?
Actually, because the US data has been surprising on the upside, we have seen US dollar strength. And traditionally, periods of dollar strength tends to see Asia and emerging markets actually underperform. And so actually, personally for me, this has been a rather disappointing year because you've had the US market is already up 10% for the year, and yet global emerging markets are so far flat. But our view is rather than just look at the dollar strength, we also need to look at what's driving the dollar strength. If the dollar strength is being driven by risk aversion, events like Cyprus, yes, we do agree that emerging markets may underperform. But if the dollar strength is actually being driven by stronger data, we actually think it is good for markets like Korea, which are driven by the US, and also for Indian IT, which actually benefits from that corporate capex recovery. Yes, we do think at some point the Fed will exit QE and start to move, but our view is that's still at least 6 months away.
The RBI has responded with a 25 basis point rate cut following the government's steps on consolidations. Does this change your outlook on Indian financials?
Well, we actually specifically added Bank of Baroda to the portfolio about 2 weeks ago in anticipation of a rate cut. We think this is one of maybe potentially even further rate cuts are likely. Our economists are actually looking for a total of 75 basis points of rate cuts. So far we've only seen 25. So on the back of that, we do like the cheaper financial stocks like Bank of Baroda.